Okay everyone, I'm back. Welcome back to another episode. We're gonna go over the stock that I just bought $8,000 worth, and that is Chewy stock, ticker symbol CHWY. This company has had an excellent track record of growing revenues, growing profits, and I believe that this is going to continue in the future. So let's go ahead and jump over to Fidelity and look what I bought these shares at. Like I said, I bought 100 shares and I bought at an average price of $79.94. I bought it the moment that I saw it drop below 80. I've been wanting to buy this company for the last several months. I even made a previous YouTube video about it. Go ahead and check that out if you didn't check that out in the past. But this company is a fantastic business that I'm so glad to be a part of. Of all the 5 companies that I own, in order from largest to smallest, we have Corsair Gaming, we have iRobot, and we have Chewy, which is almost the same as iRobot, and then we have Tattooed Chef, and then we have Clean Spark. Of all 5 of these, as far as owning them based on the fundamentals of the business, regardless of valuation, regardless of opportunity for upside, as far as the pure business goes itself, I think that I'm probably most bullish on Chewy over all 5 of these companies. I'm not even exaggerating. I believe that this company has ample upside opportunity just on the fact of its underlying business, regardless of the valuation. So I'm gonna go over in this video some of the main bullet points why I bought this stock. If you haven't checked me out before, my name is Jordan. I'm a millennial investor. Go ahead and check out some of the referral links down below, including things like M1 Finance, you got a savings accounts, Robinhood, Webull, anything you want to sign up for investing or getting started or earning extra income. That's all listed down there below. But let's go ahead and get started with Chewy stock and the reason why I bought it. Now first off, I want to go ahead and go over to Yahoo Finance and I want to take a look at the balance sheet. This company has massive amounts of cash on the balance sheet. It has over $700 million in cash and cash equivalents. That is a massive pile of cash, and that is growing steadily quarter over quarter. You can see over the last year this has steadily grown and it is not stopping anytime soon. It continually has gone up quarter over quarter. Now last year this company raised a lot of capital from issuing more shares, but mainly the reason why it's raising as of late is because this company is finally turning a pretty good profit and they're expected to really ramp up profits over the next year and going into the future. But this company's long-term debt, if we go back to the balance sheet here and we scroll down to their long-term debt, you see that they have their capital lease obligation, but that's just basically their rent for their buildings. Talking about the actual long-term debt, as in raising money from shareholders, taking on long-term debt from big banks, the number is 0. So this is a company that has $0 in long-term debt, has over $700 million in cash on the balance sheet, and it is growing profits, growing revenue, and I love a company that has a healthy balance sheet because if downturns happen, if a COVID-19 happens, if a 2008-2009 financial crisis happens, this company is well capitalized to take on some losses if something bad were to ever happen with the business. Now looking over at Yahoo Finance again, except we're going to look at the analysis tab, you can see that earnings per share will increase dramatically. They're expected to do 12 cents of earnings per share this year and then estimated to do 38 cents next year. Like I said, profits are finally starting to ramp up for this company. The revenue growth is expected to grow 30% this year from $7.15 billion last year up to $9.29 this year, and then grow an additional 18.4% the following year up to $11 billion on the dot. This company is still growing revenues at very fast paces, and it's expected to grow double-digit revenue growth for pretty much now until the next decade, and that's one of the main reasons why I'm owning this company. Now not only that, but like I said, this company is getting more profitable. So let's go ahead and head over a hyperchart and let's look at the quarter over quarter basis for revenue and net income. This is the quarter over quarter revenue chart for Chewy stock. Like I said, every single quarter has been more impressive than the last. Customers are spending more on their products and it has no end in sight. Now not only is their revenue growing quarter over quarter, but the net income tends to be doing the same thing as well. Now like I said, this company is just now starting to turn a profit. In the past, this company has been a money-losing stock, and that is unfortunate for its previous investors. But even over time, quarter over quarter, you can see the gradual trend. This company has shrunk its losses smaller and smaller into where now in the last 2 quarters before this one, they finally turned a pretty good profit. And now they had a small loss, but like I said, that's probably going to be one of the last, if not the last, unprofitable quarters that this company will ever report. I think it's very likely that we see profitability for this company over the next 5 years literally 10x, and I'm not even exaggerating. That I think it's going to 10x for what it is in 2021, what it will be in 2026, because right now the profits are this big and it's going to be much higher than that 5 years from now. Now what I wanted to do is I wanted to go over why I think Chewy stock dropped on its last earnings report. It really didn't miss revenue, it really didn't miss profitability all that much. One of the main concerns was acquiring new customers. Now in 2019, they grew customers great, but in 2020, they grew customers at a rate that is unprecedented, like never seen before. Now obviously, as you all know, what happened in 2020, that was COVID-19. Now COVID-19 threw everybody for a loop, and that includes Chewy stock. Chewy's business is perfect for a situation like a pandemic and lockdowns. Obviously, if everybody's stuck at home, if no one's able to go outside, if you're not able to go outside and get dog food, cat treats, things like that, then where are you gonna order it from? You're likely gonna order it from Chewy. And so customers started signing up for Chewy left and right at once again a rate that had never been seen before by Chewy or any of its competitors. And so Chewy acquired a drastic number of customers in the year of 2020. And now that it's starting to slow down a little bit, obviously, because how are you going to compete with the year of the pandemic in 2020? I expect those numbers to come down. Chewy expects those numbers to come down. But in the meanwhile, this company is still expected to grow. Here's a quote that I got from their recent earnings report, and this shows me that there's no doubt moving forward with Chewy's business. Like I said, the fundamentals of this business are fantastic, and regardless of whether there's a pandemic or not, a shutdown or not, this company is going to continue to grow as they did far before 2020. And here's that quote that I can read off right now. It says, as Summit mentioned, year-to-date gross customer adds are running 20% above the comparable pre-pandemic period in 2019, and retention rates are stable. To better demonstrate the dynamics of new customer adds and retention as they relate to net active customer adds, we have included a supplemental section on this topic. In our shareholder letter this quarter, second quarter net sales per active customers, or NSPAC, increased $48, or 13.5% to $404. That was a $16 sequential increase over quarter one. Now, one of the best parts about this company is that their net retention rates for revenue, basically meaning in English, if someone signs up for Chewy and they spend $100 on Chewy products the first year, they're more likely to spend more than $100 the following year. They might spend $110, $120, $150 the following year than spending less than the previous year. People that spend money on Chewy typically, statistically speaking, spend more the third year than they do their second year, spend more the fourth year than their third, spend more the fifth year than their fourth year. The company continues to see increased revenues from its existing customers as they have those products auto-delivered to them. It's already scheduled ahead of time, a month, 2 months, 3 months ahead of time to receive those products. As the prescriptions for their pets start to come in, they get revenues from those as well, and that's recurring revenue. Another thing, as Chewy's expands its product offerings into more brands of leashes and more types of dog and cat food and types of treats and other things like that, as that increases, that also offers more opportunity for Chewy to increase revenue. So all these reasons are some of the main bullet points why I own Chewy stock. And as you can see, going back to Fidelity here, like I said, I own 100 shares at $79.94. Now, as with all the companies that I own, I try to target, I don't always hold to this, sometimes it's more, sometimes it's less, but I try to target at least 1% of my investment on a month-over-month basis. So if I'm going to sell a covered call 3 months out, I want to get 3%. If I want to sell a covered call 6 months out, I want to get 6% of my investment. In this case, I sold Chewy stock, just a covered call, a very simple 1 month out. It expires almost exactly 1 month from the time that I bought it, and it made me almost on the dot 1%. It made me just over 1%, so I'm already hitting that 1% target, and I'm going to get paid to wait and to hold this stock in the meantime. Now, Chewy stock, I really, like I said, because of the fundamentals of the business, this is going to be one of those that while I'm going to be selling covered calls against every month, this is going to be one of those that I really do not want to lose. So I'm probably going to be pretty conservative on my calls over this one compared to some of my other positions, because the last thing I want to do is lose these shares if possible. If I lose them, if I have to sell them for a profit, that's okay, but these are the type of shares that I really want to hold unless this company starts to go up drastically in price and get well back into the triple digits. But thank you guys so much for watching. I hope this provides some insight for Chewy and what I'm doing. Thank you guys so much for watching. Check out that stuff down below if you haven't already, and I'll catch you guys next time.